Good day, everyone. How are we doing today? This is Double Daddy here from TokenPathways.com, bringing you some daily crypto news, and today's is pretty good. The first article we look at is from Coin Tribune, and it discusses the upcoming U.S. Senate vote on the Genius Act, a bipartisan bill aimed at regulating stablecoins. The legislation seeks to establish a strict legal framework for stablecoin issuers, requiring each stablecoin to be backed by US dollars or equivalent liquid assets, and mandating annual audits for issuers with a market capitalization exceeding $50 billion. It also imposes specific requirements on foreign stablecoin issuers to ensure compliance with U.S. regulations, particularly regarding criminal asset seizures. The bill, supported by the Trump administration and influential crypto figures, is seen as a strategic move to enhance investor protection and position the U.S. as a leader in crypto regulation. If passed, it could set a global standard for stablecoin oversight, potentially boosting the regulatory maturity of the crypto sector and impacting the market immediately. This bill gets voted on tomorrow. That's pretty big news. But that's not all we've got for you today. From the Crypto Potato, we have an article. And it reports in this article that there's a significant shift occurring at the United States Securities and Exchange Commission's, or the SEC's, stance on decentralized finance, or DeFi, positively impacting Ethereum prices. At a crypto task force roundtable yesterday, June 9th, SEC Chair Paul Atkins endorsed DeFi, stating that its alignment with American values of economic liberty, private property rights, and innovation is inherent to its DNA. He criticized outdated regulatory frameworks for stifling blockchain innovation and directed SEC staff to explore guidance for blockchain transactions and to propose rule amendments to support on-chain financial systems. Atkins also suggested an innovation exemption to expedite compliant on-chain products, aligning with President Trump's vision of making the U.S. the, quote, crypto capital of the planet, unquote. Former Ethereum developer Eric Connor called it a huge day for Ethereum, highlighting potential regulatory clarity for staking, self-custody, and open source infrastructure. Ethereum, with a current hold of 55% of the DeFi market share and $68 billion in on-chain value, stands to benefit significantly as a result of these frameworks. Now, these are fantastic articles, both of them, and we can link these together in pretty important angles. We've got the complementary regulatory momentum. The Coin Tribune article highlights proactive legislative effort in the Genius Act targeting stablecoins, which are the foundational element of the broader crypto ecosystem and DeFi. The Crypto Potato article, meanwhile, details a significant shift in the SEC's stance towards DeFi, a key application built on crypto like Ethereum. Now, together, they paint a picture of a multi-pronged approach by the U.S. government to establish comprehensive and supportive regulatory frameworks for crypto. I'm saying frameworks a lot today. The Trump administration's vision is apparent in both articles. They've both explicitly mentioned Trump's influence. The Genius Act is supported by the Trump administration, and the SEC Chair Atkins, who is placed by Trump, his statements align with Trump's goal of making the U.S. the crypto capital of the planet. This suggests a unified top-down strategy to foster crypto innovation while also implementing investor protection. It's a lot of big words. So let's just look at numbers for a minute. While we talk about DeFi and stablecoin interdependence, because DeFi protocols rely heavily on stablecoins for liquidity, trading, and lending. And take a look at these numbers. We've got stablecoins all over the top coins. If you see a dollar, say at coin 31, and you see another dollar at coin 3, those are both stablecoins. So, if the Genius Act is providing regulatory clarity and stability for stablecoins, this would directly benefit the DeFi ecosystem that the SEC is now openly embracing. A secure and regulated stablecoin market would reduce systemic risk within DeFi and encourage greater institutional and retail adoption. So what that means is the numbers that you see on the screen here, they're going to go up. Large. So the Genius Act is focusing on investor protection and innovation. With regards to backing, audits, foreign issuer compliance, this perfectly complements the SEC's new directive to support on-chain financial systems. This is not just relevant, but the timing of this is really important. Both of these articles were published yesterday, and the Genius Act gets voted on tomorrow. So if we think there's a narrative and we think there's a bit of a playbook happening here, I think that that's a pretty reasonable thought to have, given how quickly and how organized these complicated government levels are coming together in lockstep. I mean, we've recently heard other news from other analysts that Ethereum is being purchased at a massively accelerated rate by those in the know. And maybe now we have an indication as to why. So where can this go? What are we seeing here? Well, to start, we have accelerated institutional adoption with clearer financial regulations for stablecoins and a more welcoming stance from the SEC on DeFi. Institutional investors who have largely become hesitant due to regulatory uncertainty are likely to increase their participation in the crypto market. We see ETFs offering advice. We see ETF issuers offering advice. And financial advisors who have come out and said, well, allocating 1% of your portfolio to cryptocurrency is it's a reasonable thing to do. Where now we're hearing, up to 30% of your portfolio should be crypto. And we've even heard aggressive things like more than 80% of your portfolio should be into crypto if you're into aggressive market, or if you're into positive market movements and you're into being at the edge of significant gains due to regulations in their infancy. Smart people gravitate to new things, and trying new things is some of the best things you can do for yourself, because at times like this, there is room for tremendous financial gain. Not just that, but now we're looking at increased market maturity and stability. The Genius Act, if it gets passed, it'll instill greater confidence in stablecoins. It'll reduce volatility in the overall crypto market, and maybe, just maybe, reduce the amount of negativity that's coming into the space, making them more attractive for everyday transactions and as a store of value. So, if the US can set a global standard for stablecoin oversight and actively foster DeFi innovation, I personally can't see a reason why they aren't poised to become the leading jurisdiction for crypto developments, investment, and usage. There was a reverse crypto brain drain happening in North America where folks who were talented would leave for a little more crypto-friendly regions. And I can easily see that reversing course given what's happening here. So we've talked enough about broader retail adoption. Now we're going to see, I guarantee you, we're going to see an innovation boom in DeFi. The SEC's innovation exemption and general supportive stance, it's going to trigger a boom in the DeFi development with new protocols, products, and services emerging rapidly, particularly those built on Ethereum and other chains that have proper levels of support. Now, this is a bit of an outlier, but I'm going to throw it at you anyway. There is potential for a flippening or a stronger altcoin performance as a result of this as well, but again, I view this as unlikely. Now, Bitcoin is a key player in the space. Specific focus of stablecoins in DeFi, however, could disproportionately benefit Ethereum and other smart contract platforms. If the DeFi continues to grow and flourish under favorable US regulations, Ethereum's position as the leading DeFi blockchain could solidify, potentially changing Bitcoin's market dominance in terms of utility and overall ecosystem value. Now, again, I'm not saying this is going to happen, but it's something to watch for. If you were present for the flippening in 2017 with Bitcoin Cash, then you know things like this can and have happened in the space. Again, I'm going to throw it out there. I think it's unlikely, but it is possible. So we're going to revisit the US setting a strong precedent for a regulatory template here. And this could compel other major economies to expedite or mirror their own crypto regulatory frameworks to remain competitive, to prevent that brain drain that I was just talking about reversing. So this regulatory clarity could pave the way for an entirely new generation of regulated crypto investment products, such as DeFi ETFs or stablecoin-backed financial instruments, further bridging traditional finance with the crypto world. In essence, these two articles signal a pivotal moment where the US is moving from a largely reactive and uncertain regulatory environment to one that is proactive, supportive, and designed to integrate cryptocurrencies, particularly stablecoins and DeFi, into the mainstream financial system. This shift has the potential to usher in a new era of growth and legitimacy for the entire crypto industry. This is massive. So yeah, overall, not a bad news day. Why don't you take a little hyper adoption to go along with your meal, or your drive, or your shower, or wherever you're playing this, and have a smile, knowing that right now is a pretty good time to be in the crypto space. Today's video has been brought to you by your friendly neighborhood Double Daddy and the fine folks at tokenpathways.com. Don't forget to like and subscribe or visit the website for more. Go out and have a great rest of your day and be your very best self. Thanks for watching.